My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bullish long white Mariposa on Friday, and also a second bullish white soldier. However, more importantly than that, it was the break up and close over the March 2008 low at 121.52 that had the week before capped the market, along with the now dissipating forces of the January to February reverse head and shoulders neckline, currently 121.07, the 2021 downtrend, currently 120.87, and finally the newly drawn upper time, currently 120.90 of the late February to late April action that were key. Overall, the market smacked up through a load of resistance and closed over all of it. In the process, the action created a weekly key reversal up and the possibility of a new pattern. If we take the late March to late April action as one leg and the last 2 weeks as a possible hesitation, then we may, just may, have a possible bull flag, one to complement the bear flag from last February to late March. This is far from a done deal, but it is enough to place a provisional target X above in the 124.35 area. Let's wait and see. There's a lot in the way on the journey up there. So far today, a small hesitation based around the March 2018 low. So far looking mainly above it and mainly looking like a doji cross. Cable, aka sterling against the US dollar. A counter to the counter bullish opening white Mariposa on Friday, and a test again, the sixth test this time of the overhead cap of the market from the 139.99 resistance. This 139.99 level has rebuffed 5 earlier attempts higher since late February, and even that attempt back higher in late February was turned around after a week. So it's important to pay close attention to it and the resistance levels beyond at 140.75, 141.43 and the March 2018 high at 142.43. We also have the double bottom formed since mid-March. Preliminary target X for the double bottom is in the 142.45 area, the same area as the March 2018 and February 2020 highs, whilst the full target X1 is in the 143.30 area. Overall, we're still in between the lower tie, currently at 137.88, and its long-term partner, the medium moving average, currently 137.93, they're below, and the middle tie and above, currently 142.47, and that's of the June to September 2020 bullish shift pitchfork. Please remember, this pitchfork has given the bullish angle attack this market since September last year. Finally, and by no means least, the market made a weekly key reversal up last week. So far today, a significant move higher over the key 139.99 level and challenging the next resistance at 140.75 at the moment. Euro sterling. A second bullish white soldier on Friday, but also an indecisive spinning top as well. The market has shown some indecision as it approached the flat top of the recent April-based ascending triangle. However, I'm minded to think that it is the rapidly descending medium moving average overhead, currently at 87.32, that has caused this hesitation. And that's at the top of the very recent rise. It was nevertheless a second close over the significant April 2020 low at 86.69. Meanwhile, further below we have the supportive flatlining short medium moving average, currently at 86.21, as well as the initial potential target X for the descending triangle in the 85.90 area. I asked last week 2 questions. Will there be a pullback, as descending triangles are rife with pullbacks? And will this descending triangle morph into a double top? Well, so far we seem to have had an answer to one of them. Yes, we've had a pullback. This leads to the supplementary question, will this market resume its move lower after this pullback? So far today, a big answer and a big looking move lower, looking right now like a key reversal down, if only just, and a possible bearish engulfing pattern as well. The only thing that has halted the decline has been the ever-present presence of the short medium moving average support. US dollar against the Indian rupee. A big day Friday after the previous session's ground-breaking move lower. A bearish closing black Mariposa that punched down and most thoroughly closed below the combined support of the 50% Fibonacci line, the September 2019 to April 2020 move at 73.67, the flatlining long moving average currently 73.61, the rising short medium moving average currently 73.60, and lastly the medium moving average currently 73.34. In addition to all that, the market reached the initial potential target X1 for the double top over April, 73.45 area. The full potential target X2 for this is in the 73 even area. So far today, a bit of a pullback up over the medium moving average, but not excessively. Just below, in the region of target X2, we have congestion from January and February, though this hardly showed up on the way the market moves higher. US dollar against the Brazilian real. A third bearish black crow on Friday, and yet another move down towards target X1, a possible full target for the recent sideways triangle at 513.80. I've recently had a suspicion that this may be too much of an ask, and I've even thought of retiring the target. Well, not now, as we are so close, though I'll still keep a watching brief on it. Overhead, we still have as a resistance combination the recent 50% Fibonacci line at 544.41, the medium moving average currently 546.88, and the long moving average currently 544.94. One final point. The hesitation we saw last week and late the week before may turn out to be a bear flag. It is early yet, but once, should it happen, target X1 is out of the way, then I'll look at that one more closely. US dollar against the Mexican peso. A second bearish black crow Friday and a follow-on low to the previous session's key reversal down, this time using the overhead late February to late March head and shoulders neckline currently at 20.1082 as the base of operations. Last week I retired all the potential targets below. These were from the two head and shoulder top patterns overhead that had been formed over this year. Seems to have been a bit premature. To recap, they are two possible head and shoulders tops, one from mid-January to late March, another from late February to early April. First case, we have initial target X3 in the 1971.70 area, with a full target X4 down in the 19 even area. Second case, we have initial target X1 in the 19.5 area, full target X2 down in the 18.85.5 area. These came into doubt recently because of the breaking of the March downtrend that I've since removed. After some severe bullish pressure, I'd removed them. Well, it seems that the removal was, as I say, premature, and so I've replaced the targets back on the daily chart. So far today, not much. Looking like an indecisive spinning top, doji cross possibly right now. Based around Friday's close, a little attempt lower at the moment. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.